Welcome to another S&P Futures day trading recap on an Apex paid account, where I'm keeping most of the profits and none of the losses. You can sign up for your own Apex account with my link in the description and use my coupon code for 50% off the first month and 50% off all recurring months. From now until the end of February, Apex is also offering 50% off all account reset fees. Overnight and pre-market price action was looking pretty bearish, and I saw that there was a major draw on liquidity below, so I go short after I see price shift market structure to be bearish on the 1-minute chart and retrace back up into a fair value gap. Unfortunately, I become a victim of inducement as my stop loss gets hunted on a short-term buy-side liquidity grab before the real drop that I was anticipating. I'll let the rest of the price action play out, so you can get a taste of my pain after seeing price hit my target without me. The huge flush downwards after I get stopped out of the previous trade confirmed my bearish bias, and there was still a strong draw on liquidity below, so I decided to re-enter short when I see price retrace back up into the bearish order block. Surely I wouldn't get induced again for the second time in a row, right? Wrong. After taking short-term sell-side liquidity, which had been my previous trade's profit target, price reversed all the way back up to immediately take buy-side liquidity, and I get stopped out for the second time in a row in a very similar manner. As you can see from the rest of the price action today, I had the right bias for both trades, as my intended profit targets were both hit after I got stopped out of the trades. This really has been the story of my life for the past 2 weeks, as many of my losses during this massive downswing have been due to getting stopped out on short-term liquidity hunts before the big move I was looking for. Since my technical setup, based off the 2022 ICT mentorship model, relies on limit order entries off deep retracements with my stop loss set at the pivot points, I've always known that these short-term liquidity hunts are a risk with this entry model. However, these past few weeks, it just seems that the risk of this happening has been higher than ever, as I don't think I've had such a low win rate since I've started day trading about a year ago, even back when I was trading using completely different strategies. What initially drew me to ICT's 2022 entry model was how simple and objective it seemed to be. I'd narrowed my entry rules to remove as much discretion as I could, as I would set my entries, stop losses, and profit targets at the same relative levels for every single trade. This worked well for the most part, and when combining this objective entry model with strict risk management rules, I was even able to pass a 50K Apex evaluation in about 2 months, with every single trade taken fully documented on this YouTube channel. Unfortunately, ever since I started trading the funded account 3 weeks ago, I've just been getting absolutely smoked by the market, as evidenced by this brutal equity curve and my embarrassingly low win rate of 22%. After analyzing all my losing trades, I've come to realize that my poor performance has been primarily due to my overly rigid entry requirements. As we all know, the market is incredibly dynamic, and I've been trying to force the same basic ICT entry model onto price action that's constantly changing. It's become very clear that my entry model is not universal by any means, and in fact it performs quite poorly in the ranging price action we've been seeing lately, where buy-side and sell-side liquidity are being taken in rapid succession. I want to be clear that I'm not suggesting that ICT concepts are not valid. In fact, I know plenty of ICT traders who have been doing quite well in these market conditions by incorporating more advanced ICT concepts that I'm not as familiar with. My losses are a result of my own stubborn thinking that a single technical setup can be profitable in any market condition, which is just not true. My game plan for now is to try to be cognizant of market conditions before entering trades, and to sit on my hands if it looks like we're in a ranging market. I'll only take my setup if we've broken out of the trading range, as that's when my setup has the highest chance of success. Hopefully, I'll be able to start a comeback, but my mental line in the sand is if my account drops to about 48,100, which will be about $500 away from the liquidation threshold. At this point, I'll save my paid account since I've already paid the one-time fee for it, and start trading a fresh evaluation account again using strict risk management. This way, I can continue to refine my technical entry requirements without risking the paid account that I worked so hard to get. I may start incorporating more advanced ICT concepts, or I may start looking into other more straightforward strategies, as the ICT setup just isn't as simple and objective as I'd hoped it to be. I'm not going to get ahead of myself yet, and will continue to stick to the plan for now, but whatever I do end up deciding in the future, I'll of course be documenting everything here on YouTube. To end this video on a brighter note, I have noticed that I've made tremendous improvements in training my trader psychology, as I've sized down to the point where losses don't really bother me anymore, and it's been very easy to stick to my 2-loss max rule. I really do think that the psychology aspect is the hard part, and I'm really pleased with the progress I've made here. Now, I just gotta work on my technical trading skills, which should hopefully be the easy part. As always, thanks for watching. Please leave a thumbs up if you enjoyed, and subscribe so you're notified of the next time I post a trade recap. In the meantime, I'll continue posting daily profit and loss updates in my channel's community tab.